what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and well, without further ado, let's jump right into Bitcoin. Now, we were looking at two major events, right, that just passed us, and that event was number one, the CPI data release, which we got, and number two was the FOMC meeting that takes place almost every month with Jay Powell, this man here, coming out and giving us his plans on monetary policy, whether or not he's changed things, and how much is he going to be increasing rates by. Now, with all the data that came out, the data actually looked pretty good. Okay, we'll be going over that in a bit. But my read on the data, guys, is that we are approaching an end to the bear market. So what I'm saying is that newer lows for Bitcoin is diminishing as we speak. Now, it's important to note that this is going to be contingent on no more black swan events in the crypto space. Because what you guys need to understand is that this entire move, let me just zoom into this price action right here. This entire move from 18.7K all the way down to 15.8K was based on a black swan event, which was the FTX debacle. So now, contingent on no more black swan events, okay, we're likely reaching the end of the bear market. So today we'll be talking about what I expect from price action moving forward from here based on the data that just came out. Now, before we jump into that, I just want to go over one housekeeping thing. A couple of days ago, I got someone asking me if we are running discounts on the Mango dynamic indicator. So we don't have any Christmas discounts per se, but hey, you know what? We still have the 21 under 21 discount running, okay? And we're going to honor that, guys, for as long as Bitcoin is under the weekly. Let me just zoom out of this picture. We've sort of tried to gamify it in a way. But yeah, as long as it's under the weekly 21 EMA, okay, the discount will stay intact. So it's essentially 21% off on for as long as Bitcoin is under the 21 EMA, okay? Very, very simple. So for as long as you're under the 21 EMA, that discount is going to be on the seed program, on the dynamic indicator, as well as there's already a discount baked into the Mango dashboard. So just letting you guys know, I'll be linking the discount code in the description below. It's 21 under 21. Now let's jump into price action, the data, because we have a lot of interesting things to dissect. Now I'm going to try and keep this as succinct as possible and not try to overload you guys with too much information. In fact, Sean actually did a brilliant video with almost like a mind map as to the different scenarios that could play out. Now this was his little flow chart that he had based on the different outcomes of CPI and the FOMC meeting. Okay, so his first outcome is CPI goes down and Fed funds rate also goes down. Okay, and the second outcome was CPI goes up and the Fed funds rate also goes up. So now from these two scenarios, it was scenario one that actually ended up playing out. But now the coolest thing about Sean's flowchart and the most interesting thing is that the outcome of either of the two paths lead to the same thing. It leads to risk on. Okay, it leads to long risk assets, which is long Bitcoin, long NASDAQ. And however, while, you know, that's great, okay, that's very interesting, but I want you to see what led to that outcome. What led to the outcome was liquidity. Okay, for any bull market to begin, we need the foundation of liquidity. So as the data poured in, we actually followed path one, wherein we got a lower CPI rate and we got a lower Fed funds rate, okay? Because let me show you guys, as you can see right here, CPI actually came in underneath the forecast of 7.3%. So CPI came in at 7.1%. And if I take you guys on over to the CME Fed Watch tool, so we had 50 basis points, a hike of 50 basis points and 75 basis points. Now the status quo so far, guys, has been the Fed actually coming in and raising rates by 75 basis points almost every month. Now this is the first time in a very long time where they've only increased it by 50 basis points. Okay, so this is like a notch down. And as you can see, now Sean, of course, when he explains his thought process to you guys, it's a lot more succinct and it's a lot more well explained as to why all of this actually leads to additional liquidity in the markets. Now remember, liquidity is what's going to drive the next bull market. We need to see liquidity to start pouring in here, okay, for this market to turn. Now, essentially what Jay Powell said yesterday was that, hey, depending on the data that pours in the next upcoming months, we will act accordingly as far as monetary policy is concerned. But the entire rate increase of just 50 basis points is him pulling back on the throttle. Okay, so this was a good sort of number for the market, because as far as the Fed's mandate is concerned, actually I'm not going to call it the mandate, but they're looking for a recipe of sorts to really understand when is a good time to start pulling back on their tightening. Okay, they're looking at a few things here. They're looking at CPI. Okay, basically they're looking to get inflation under control. They're looking at the price of goods. They're looking at CPI. They're looking at housing, okay, because the price of housing also went up to some crazy levels in the United States. And then the third thing they're looking at is the labor market, which is tight. Essentially what this means is that there is more supply of work than there is demand of work. And usually when that happens, employers have to up their wages, okay? For them, it becomes a very, very competitive market. They are not able to get labor very cheap. So now from these three things on their agenda, we're seeing CPI and housing actually take a leg down. Okay, so it is following the trajectory that the Fed actually wants to see. All right, as far as labor market is concerned, that is sort of tapering off right now. So we'll have to wait on additional information to see where that goes. But it's the mix of these three things that's going to get the Fed to pull back on the throttle there. Okay, and them pulling back on the throttle is what's going to increase liquidity. Okay, it's liquidity that's going to be the foundation of the turn in the market leading into the next bull run. Now, for those of you wondering, well, Krisha, why are you so optimistic on these numbers? What if they don't come out as planned? Well, here's why I'm optimistic. Because the rate increases that we've seen, which is a good 450 basis points in less than a year. Guys, this is unprecedented. Okay, let me take you on over to this chart. The last time, this is the rate increase, by the way, that we saw. This is the liquidity that got squeezed out of the market at this speed right here. This is almost like a vertical line up. The last time we had such steep rate increases was only, this was before I was even born. Okay, let's do max. Yeah, this was back in the 80s. That was the last time we saw a rate increase this steep. So for those of you thinking that we've seen the full effects of this rate increase actually play out in the market, I'm saying think again. Okay, the effects of this increase has not been felt just yet. And that's why I'm a little more optimistic on these numbers actually coming back into equilibrium, like CPI, housing, and labor market. And the more that this comes into equilibrium, the more they pull back into throttle. That is directly going to affect the liquidity in the market. And that's why I'm saying that the probability of Bitcoin making new lows now is diminishing as we speak. Alrighty. However, as many of you guys know, I am a huge proponent of let price be the arbitrator of all debate. Now, as far as price action is concerned, Bitcoin did break out of a critical level being 17.2K. As you guys can see, ever since we had that FTX debacle, the FTX debacle actually dumped Bitcoin all the way down to 15.8K. And ever since then, we had been struggling to get over 17.2K. Every attempt at 17.2K was met with rejection. This is the first time in a long time that we got two consecutive daily closes over 17.2K. And if you guys recall, that is essentially what I was looking for in order to get bullish. As far as my next leverage play is concerned, I will be looking to take a leverage long around this cluster right here at around 17.2K. Okay, which is a retest of the level that we recently broke out of. So I'll be sticking to my plan in that regard. But what I'm really liking about this price action is that we've finally managed to penetrate a new range. The next major target overhead, guys, is only going to come in at 18.7K. Taking back 18.7K is going to lead to the next impulsive move for Bitcoin, because at that point we got a new order block right in front of us, okay? That is 18.7K going all the way up to $20,000. At that point, what you guys need to understand is that Bitcoin has then penetrated a brand new range of price action. We then go back into the same range that we were oscillating within before the FTX event actually happened, which is 18.7K going all the way up to $23,000. The break of 17.2K also got Bitcoin to break out of a cup and handle like formation, which is this right here. Okay, the measured move to which, let's go ahead and take that measured move all the way at the break. The measured move will take Bitcoin all the way up to 19.2K. Okay, that is the measured move of the cup and handle formation. At what point is this entire play invalidated? At what point am I invalidated on my trade? I will be invalidated as soon as Bitcoin closes a daily candle underneath 17.2K. Okay, keep it very, very simple for yourself, because 17.2K, allow me to just switch on my Ichimoku cloud. As you can see, we got the Tenkin 21 and daily 10 SMA sitting right there. How about the 12-hour time frame? We got the 21 EMA swinging right over. Let's go ahead and put on our Mango Dynamic indicator. We got the Mango Dynamic there as well. Daily Dynamic also sitting on the same level, so you can see there's a lot of confluence on that level. Losing that level will basically negate us on that trade. Managing the trade is what's going to make the trade easy. It's about jumping into trades at critical levels. That way it becomes an easy one to manage. That way, if price breaks, there is a good probability that we actually get a retest of the same region, allowing us to get out safely with minimal losses, or in some instances also a slight profit. Okay, so it's about making sure you score your trades at critical levels. For those of you who ask me, Krisha, why would you wait for 2 consecutive daily closes over a level? And what would you do if volatility picks up in that time? Would you just get in on the breakout? No, I don't usually do that. I always wait on a critical level. I always wait on a pullback. I was not willing to not wait on 2 consecutive closes because, hey, guys, we were leading into 2 major events, one being the CPI release and one being the FOMC. Right, so either I get my trade on support, right, so we're looking at the 12-hour dynamic. I either took my trade on the 12-hour dynamic, or I wait on the breakout before I get my bid, right? So in this case, I was waiting for 2 consecutive daily closes before I decided to jump into a leverage trade. Do I basically just get into a leverage trade right here? Okay. No, I don't. I usually wait on a pullback. What if I don't get the pullback that I'm looking for? Well, then tough luck. I will have to wait on the next level. Why I did not jump in on the dynamic is because I knew that I was not going to be on my PC to manage my trade in case the news went against me, because this right here was leading into the CPI data release. Okay, now what I knew to an extent was that, hey, this price action right here somewhat already priced in a good CPI reading as well as a good Fed funds rate, okay, to a certain extent. If the CPI reading came out hot that day, this would see a dump and I would not be on my PC to actually manage my trade. So jumping into trades upon news events is going to be very, very situational. Make sure that you're going to be at your PC to manage your trade in case it goes against you. Okay, because I knew I was not going to be there, I decided to instead wait on 2 consecutive daily closes over 17.2K before I decided to jump into a leverage long position. So after 1 month of consolidation underneath 17.2K, Bitcoin has now penetrated a brand new zone, with the next target overhead only coming in at 18.7K. Okay, the measured move of the cup and handle comes in at $19,217. I'm saying that 13K Bitcoin gets very, very, very grim as soon as we start closing dailies and weeklies over 18.7K. Okay, 18.7K is going to be that critical take back level. At that point, we would have essentially undone the entire price action leading into the FTX drama. So as far as your trades are concerned, I'm saying focus primarily and only on the TA. As far as the FOMC and rates and everything is concerned, that is your macro picture. Okay, let that guide your expectations for the months to come, not the days, not the weeks, for the months to come. Okay, because all of this, the FOMC information, the interest rates, the CPI, that is going to play out for the next months. Okay, I'm talking about 3 to 6 months. So if you are a short-term trader, let price guide the way. Okay, let price be the arbitrator of all debate. Now, I hope you guys enjoyed this video. I hope you found something to take away from here. If you did, make sure to smash that like button because it goes a long, long, long way for the channel. And hey, it also encourages me to do more of this. And I will also be linking Sean's amazing, amazing video on him breaking down the different paths between CPI and interest rates. Trust me, guys, if you just listen to that once, you can actually carry out a very, very intellectual conversation with others. And that is also, there's power in that. There's also power in knowing and how to sort of understand this information, how to absorb the information. So go ahead and give that one a watch. He breaks it down very simply, very succinctly, very Sean. So yeah, I'll be linking it right here. And with this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.